Hey guys, what's going on? Welcome to another video. As you can see, the scenery is a little bit different. Today I'm standing in front of my whiteboard and I'm going to go through my strategy and a little bit of my trading plan and talk to you guys about some trades which I'm thinking about taking today and how this all ties together so you can have a better understanding of why I take these trades. Now, without wasting any time, let's jump straight into it. So I've got, first of all, scenarios to trade. Pretty much this tells me, okay, before I actually take a trade, what am I looking for to happen? So that's three things here. I'm looking for break and retests of trend lines, consolidation boxes, and horizontal levels. And I have drawn them out at the bottom here for you as well. So here we have the break and retest of a trend line, break and retest of a horizontal level, break and retest of a consolidation box. So these are the three things which I look for before I take a trade. If I don't see any of these three things, then it's not a trade for me to take. So now below here I have a few confluences which I like to follow. So first of all, the moving averages must cross correctly. Now if you follow me already, you would know that if it's a bullish trend, then I look for price above both moving averages, and the green moving average must be above the red moving average. On the other side, if it's going bearish and I'm looking for sells, then price must be below both moving averages and the green must be below the red. So the green moving average is an 8 SMA and my red moving average is a 20-day EMA. So that's what I have on my setups, and that's what I look for in regards to moving averages and price when I enter these trades. Also, I'm looking for higher highs, higher lows, or lower lows and lower highs. Again, this is just following market structure. If I see higher highs and higher lows being made with the addition of moving averages being crossed appropriately, then for me that's strong signs of an uptrend. Especially say if it breaks a horizontal level to the upside and retest, consolidation box to the upside and retest, or even a trend line breaks that and retests and goes up. With those three things, if you just combine those three, well, the way I've been trading, that's what I've been doing, and I've been seeing solid improvements in my trading for sure. And then also, another part which I don't want to miss out is my stop loss and my take profit. I need those placed according to structure, not just what's going to give me the most profits, but what are the most appropriate ways to place these trades. So if the stop loss is, if you're trying to get sniper entries, which you can, and you can make sniper entries with horrible stop losses and take profits, it's not going to make it a good trade. A good trade, in my opinion, means your stop loss and your take profit was placed appropriately, as you will see in what I'm about to show you. So up here I have a few do nots. These are mistakes which I've previously made in the past and just wanted to write it down so that before my trades I can talk about them, or just look at them to make sure I'm not doing these things. So first I have, do not enter a price before it breaks a level. So as you saw earlier, a trade when price breaks a channel, breaks a horizontal level, or breaks consolidation box. Now I used to take the trades before price would actually break that level, anticipating it to break, retest, and fly up. This was because of two things. I wanted to have more profits by catching it before it made the move, and two, well, yeah, that's pretty much it, and it just came out of greed. So I'm like, nah, we'll wait until price breaks, retests, then when all the confluences and stuff line up, then I enter. Next one is not to draw shitty key levels or consolidation boxes. So if I draw horrible channels, if I draw inaccurate horizontal levels or consolidation boxes that don't make sense, then even if it breaks that level and I enter the trade and everything works well, like confluences and stuff, it looks all good, but in reality, say price broke a level, but the level was actually here, so it looked like it broke, retested, but it was just making its way up just a couple pips before dropping back down because it couldn't break that level. Something like that. It's happened a few times to me, and going back into retrospect, analyzing my trade and saying, or looking at what went wrong, that's what I realized went wrong. I was drawing shitty consolidation boxes in key levels. Also, do not ignore larger time frames. So this also came into greed when I was really keen on entering a trade. I would be stuck in the 5-minute, the 15-minute trying to look for the perfect entry, but in the 2-hour and the 4-hour, the price didn't actually close. So it came up and then it came down, or went down and then came up without, you know, a clear close below a specific level. It tricked me. Well, it didn't really trick me. I just, you know, take action a bit too quick, and that would result in a loss. Also, don't trade against the trend. So even though I trade breakouts and retests, you should always look on the higher time frames, on the monthlies, the weeklies, the dailies, and look where the trend is going and follow that. Don't try and find the reversals and catch the massive ones, because although you might be able to catch it and make good profit, I wouldn't say it's a very high probability that, well, with my trading anyway, that every time price breaks a key level, it's going to drop and melt, or when it breaks it to the upside, it's going to fly up and reverse and I'm going to catch hundreds of pips. It's not like that. I like to follow the trend while using those boxes, key levels, trend lines, etc. So with all that done and out of the way, I'm going to show you which trades I'm thinking about taking today and how that relates to everything you just saw. Alright, so as we can see here on the Aussie dollar, well, first of all, there's 3 trades I'm going to talk about. The first one's on the Aussie dollar, second one is on gold, the third one is about GA. So with the first trade on the Aussie dollar, I'm going to start on a higher time frame, then move on to a smaller one, as I will do for all trades. Now, what can we see here? There's an obvious break and retest of a trend line. So if you know, that matches my break and retest of a trend line strategy. So I'm like, okay, this is a trade that I'm interested in. So I think I caught a few moves here. Maybe I didn't, but that's not the point. We're focusing up here because, as you can see, this is where I put my profit loss target thing. So price made a big push up after the retest, and now price is consolidating. So what am I doing here? First of all, I'll stay on the larger time frames just to have a look at a few things. First of all, what are the moving averages doing? What is price doing? We can see that price is above both moving averages and that the green is higher than the red. This means price is moving upwards for my strategy. So price has also made new higher highs. It's making higher lows. So for me, this looks like it's a good trade. So let's go into smaller time frames. On the 15-minute chart, price was consolidating quite a bit around this region, but now it finally has broken up above here, coming down for a small retest. Now, don't get me wrong, price could push down and break through this level and come back down to the trend line before going up, or it could come down to test the moving averages before flying up. But at the moment, this is what I saw happen. I saw price push against the push above the consolidation, which I was talking about earlier, and I saw a small retest here before creating a higher high, closing above anything in this area of consolidation. So I entered long. Now with the second trade, this is on gold. So as we can see again, there was a clear trend line being made, and gold was stuck in this level here. So not only did it break above a trend line, it also broke above a horizontal level, which stayed strong since quite a while, since mid-August, I'm pretty sure. So price started forming a small area around this 1960 area. So it touched here, couldn't get through. Multiple rejections here, couldn't get through. But now it's pushed and it's come back down to retrace. Now, price could actually come down to this level or somewhere around the moving averages before pushing up. But so far what I saw is the same thing. My moving averages were crossed correctly and price was above both moving averages. This was nearly a Fibonacci retracement to the 0.382 level, but it was just off, so I didn't include it on the charts. But we are also seeing higher highs and higher lows. So higher low, higher low, higher low. This I wouldn't say is a higher high, but we did see price break above this area, and since we are on the 15-minute, this is probably going to just get caught up in a big candle. So yeah, higher, we saw higher high here, higher high here. So yeah, high high, high high, high high, high low, high low, high low. So that's why I'm confident in this trade also, and I'm looking to get in. Now the reason why I drew a second trend line here and also on this one is because, well, I did set my stop loss according to structure. So for this one I put it below the consolidation box. This one I put it below the trend line. So I also drew a trend line here because if price closes below both moving averages and it closes below this minor trend line, then more than likely I will take my stops out, and that's it. I'll be out the trade. I did set the stop loss to be down there, But if it breaks any of this structure, then that's where I'm cutting my trades, just because that's how I like to manage my losses. Same goes with here. I did set my stops to be below this area here, but if price does close below both moving averages, and even there seems to be a level here, if price breaks below that as well, then I'll probably take the trade out, so I won't cop the full trade. I mean the full loss. Now with GA, we see it going to the downside. Price was reacting around this trend line here, came up, and it did form a significant horizontal level. Now it broke through the horizontal level, broke through the trend line. We see moving averages cross to the downside, and we see price rejecting the moving averages and consolidating down here. So how am I going to take this trade? Obviously, once price breaks the consolidation, once it breaks through here, retests, then I'm taking that sell down to the bottom here. Now, it seems to match everything correctly. There was no clear retest to the box or the trend line, but sometimes it doesn't. It just melts through, consolidates, and keeps dropping. So that's what might happen this time. But there is a chance that price could retrace, come back up, test this area before dropping down. Let's move into the smaller time frame, which I don't have. You can see here, this is on the 15. Sorry, it's on the 5, but now it's on the 15. Yeah, price is ranging quite a bit. Moving averages crossing all around. Now, it is starting to drop from here. It looks like maybe this is a head and shoulders, inverse head and shoulders pattern, but I don't really trade patterns too much. I just like to be aware of them. So yeah, I set the alert here, and I'm not taking any trades unless price breaks and retests this area before dropping. But I will keep my eye out around the 1800 level, or yeah, the 1818, because that is a significant area. So I'm not really going to enter short unless I see a clear break and retest of that area with all my other confluences lined up. But yeah, so these are the trades which I'm thinking about taking today. 2 I have already entered. We'll see how they're going anyways. So the Aussie dollar, slight profits, that's all good, no concerns here. I'm going to let that run because it is above this area, or this significant area, the top of the consolidation, and it's above both moving averages. Things are crossed correctly, that's all good. And gold, on the other hand, isn't doing so well, but I have no concern because it's still above moving averages are crossed correctly, and it's still above this level. Like I did say, I would not be surprised if gold did come down to touch this area before shooting up. So if it does, then that's all cool, I don't mind. I may re-enter, but most likely not. I'm just going to keep my eye on it. I'll probably set a alert down here, just to let me know if it breaks the moving averages and this level. And if I see strong wicks to the downside, I'm going to pull out the trade, wait for maybe a test around here, see if it comes back up, but we'll see what happens. But so far, no concerns, everything's looking good for my trades, so I'm just going to leave it here. I'm probably going to go train, work out, or just go do something and wait for things to play out. So that brings us to the end of today's video. If you enjoyed it, don't forget to smash the thumbs up and subscribe. I'll be posting more and more content as the weeks come. You already know I'll be dropping at least 3 videos a week. So yeah, subscribe, chuck on the notifications, and stay tuned, and I'll catch you in the next one.